Hi, everybody. Hope you're doing well. Today, we're going to cover the weekly QQQ, or what we're going to call the triple Q from Prep2grow for the week of October 19th. It's a new series for us, so if you have feedback on it, we'd love to hear it. If you want to see something or some analysis on the triple Q, certainly happy to add it into it. The format's pretty straightforward. We're just going to jump into our analysis and what we feel is going to happen over the next week and the next 30 days. We're going to talk about some unusual option volume, and then we're going to jump into the analysis. So for those that like quick answers on what's going to happen, we're going to cover that right off the bat, and then again jump into the analysis. So let's just get into it. We feel in the next, based on the data, we feel that the week of October 19th, it's going to be flat to less than 2.5% increase. Over the last 30 days, it's been exceptionally bumpy. So the triple Q is really trading with a very tight band, which is terrible for option non-day traders. They're usually like a little more volatility for the longer term options, but day traders, I'm sure, are loving the intraday ups and downs. The next 30 days, we feel it's going to be a bumper road to the all-time high. The triple Qs are the companies that really make up it, or the ones that really influence it, or acting as if it's pre-COVID. So hiring, patents, sales, growth, they're really going for what they feel, or what the data is showing is that they're really going to start to ramp things up again. So some of the reasonings, the more specific reasonings, is that Tesla and Netflix are two that announced next week. There's a few more, but those are the major ones, and they make up about 5.5% of the total triple Q holdings. For the following week, the biggies really hit. Amazon, AMD, Apple, Facebook, Google, and Microsoft announced earnings. Based on the data, Tesla is acting like pre-COVID. They're looking to really expand. Netflix is looking okay. It could go either way with Netflix. The other reasoning is that the triple Qs are only about 4.5% away from their all-time high. Typically, that high, either it's going to break out or stay stable where it is. I think with how the data is, with the triple Qs, it's going to start to go up to the high or break through it. The other concerning thing is, or I should say the first concerning thing is that longer than 30 days is that 49%, there's been a 49% drop in stock volume over the last 30 days. So this isn't too bad. It's really pre-COVID stock volume levels. So certainly down from a huge high of September and October. So if it was less than pre-COVID, then it'd be concerning, but it's right around what would you usually expect. Long-term option volume is shifting to puts. So bearish-wise in 2021, that's a concern. There's not a lot of call happening long-term throughout the 2021. So as we go beyond the 30 days, that should be a concern. Also, the external factors, COVID-19, the stimulus related to that, the elections, and the fact that we're in earnings seasons is really why we think the first week, or at least October 19th, next week, is going to be flat to a small increase. Companies with unusual high volume, Facebook and Apple. A call for Facebook for March and June 2020 expiration dates at the 270 strike price. The volume on this is huge. It's 4 times the next company that we're looking at and predicting for. Apple, it's actually going the other direction than Apple put. The volume's 2x the next closest company, and it's for the March and April 2021 expiration at a 110 and 118 strike price. So those are 2, a call and a put, that have very unusual volume. So this is where we move into the analysis. So what's really dragging or lifting the triple Q? Well, the elections, COVID-19 and stimulus discussions are more at the macro level. Very much uncertain about how those 2 things will impact the triple Q, their broader markets. The other is that 54% of the triple Qs are announcing earnings in the next 30 days, while the major players certainly are acting as if they're growing in terms of the data that's showing it. That's really geared up for Q4. And so Q4 looks like they're going to grow through gangbusters. Q3 data shows kind of flat. So in the next 30 days, we should expect that the earnings are going to be okay for Q3, but a lot of these companies are going to announce probably increases in their Q4 numbers based upon the data that we're seeing. And these are for the major players influencing the Triple Q, or really the FANG Plus. So the Apples, the Amazons, the Amgens, etc. The other thing is dragging or possibly lifting is the 49% drop in daily stock volume. It's not terrible. It's really what pre-COVID levels were at, so it's not a huge concern. The last is stock prices have been trading in a tight band, and I think the data and the investors are really just being cautious going into earnings seasons, in the election, and potentially a third wave of COVID. So not a lot of people are trying to jump into the stock market when it could potentially go down, and they're trying to protect their assets. So a lot of volatility, a lot of flatness, or potential volatility, but a lot of flatness. And for option traders, that's not great. But for stock folks, it's a good time to get in and get some stocks that have kind of leveled off and jump into it, like the Teslas of the world. So let's take a look at the 30-day stock price. So we separate out FANG Plus from all the other players within the triple Qs. The FANG Plus, the 15 of them, they make up 65% of the holdings, and they drive the triple Q because they have so much of the holdings for just those 15 companies. The other ones have, 1% or less in terms of total holdings. So if one of them do poorly, it's not going to impact the pricing for the triple Q, but if a FANG does poorly, it'll have an impact. Amazon, if it goes down, you'll see the price for the triple Q go down. Microsoft the same way. And what we see over the last 30 days is a whole lot of flatness. Not a lot of movement up or down, just a lot of flatness. Next is the 30-day stock volume. So for the FANG Pluses, their volume has almost been cut in half over the last 30 days. But for the usual or the non-FANG Plus triple Q companies, it's about the same. So certainly a lot less volume buying and selling of stocks occurring within the last 30 days. If we look at the option volume, this is for options that prep2grow predicts. So for every company we predict what would be a put and what would be an option, and then we decide based on probabilities and all our algorithms which is the way to go. What we're seeing is that for the puts and the calls for the companies we track is that there's a dramatic shift in volume from calls to options. From calls to puts. So folks are getting more bearish. And I think it has to do, again, with COVID, the election, and earnings season. So they're starting to maybe bet against the market. But the data we're seeing from the FANG Pluses is they're looking to ramp up. 30-day predicted stock price on a decline. I think this has mostly to do with Q3, not what we predict out that's going to occur within the next couple months. So typically when we predict a stock price, we're looking at a time horizon of about the next 20 to 25 days. So we do see a general decline in stocks generally occurring, but that's based upon Q3 numbers, not Q4s. And so as we start to get into earnings seasons, we're probably going to see more companies readjusting earnings for Q4, and this will probably shift back up to a more growth. 30-day call versus put predictions. Certainly a huge inverse in this. We're predicting more puts generally than calls for our companies. We get into the methodology in a couple slides, so we'll talk a little more about that. But if we look at year to date, it's not a terrible thing. It's just maybe a cyclical. The algorithm predicting a cyclical where we're at in October, with getting into November, December's are typically a huge decline in stocks, with the January push upwards. What we're seeing is that it's a lot of flatness. Certainly there's a decline in calls and puts. And so typically when we see this with our algorithms, we just see flatness in the market. So it goes back to flatness of historical predictions. Certainly we see with the earnings seasons that the FANG pluses, it looks like, again, they're prep for growth and will probably readjust their Q4 earnings. So this gets into how we go about conducting the analysis for this. So moving away from the recommendations and the data that we're seeing that's driving those reasonings for the next week to 30 days. So we track 94% of the total fund, the Triple Q fund. We don't track non-US or non-European companies. So Chinese related companies' data is very hard to get and to validate. So we just don't look at them. We have made 9,500 predictions year to date. And the companies we only use for analysis of this are the ones that have had an 80% or more historical success rates, meaning the algorithms got the pricing for the stock and for the options correct 80% or more times. So that's roughly 45 to 48% of the total Triple Q we look at that has that kind of accuracy. If we look at a time horizon, 1 to 90 days, our average time to a prediction occurring for the 80% accuracy companies is about 20 to 26 days. And really what we look at is we don't look at stocks in terms of predicting stocks. Our algorithms don't look at that. Our algorithms, or initially, don't look at that. We only look at data related to the forward-looking performance of a company, and then based upon that, a subsequent set of algorithms will then predict prices of the stocks and the options based upon their forward-looking performance. So it's kind of a tiered approach to predicting stock price and options. And of course, we use big data and AI to conduct this analysis. For those of you that aren't familiar with the QQQ or the Triple Q, we're only going to cover this as part of our initial series. We'll probably have a whole separate video that just covers what is the Triple Q. They essentially match the NASDAQ 100, and they are an ETF, and their fund is one of the more popular ones that are tracked. SPY has more volume, which is the Fortune 500. JETS is probably another one that folks look at. But the important thing to note here is that not all companies are treated equal. There's 15 companies that account for 65% of the total fund. And if one of those move in a direction, typically the whole fund moves in that direction. Or if 3 or 4 of them move in a direction, then it's going to be a very good day for the Triple Q. If some of the ones that have less than 1% volume or 1% of the holdings, or even a dozen of them that don't perform as well, probably not going to impact the pricing too much around that. So that's a huge overview, or a very high level overview of the Triple Q. Again, this is the first video in the series of a weekly QQQ or Triple Q assessment and recommendation. If you have feedback, we'd love to hear it. We appreciate your time and happy trading.